Welcome. This is India Market Open. We are taking stock of the futures and options space, how things are panning there. And well, we have seen a little bit of, a decline as far as the Nifty is concerned. Yesterday was your monthly, expiry for the futures as well as, the options market. And, a lot of these factors which we are playing out now are perhaps on expected lines. If you keep an eye on rollovers, they haven't been up to the mark, but that's also understandable because I'm sure a lot of participants at the moment will not want to go whole hog into an event which comes every 5 years, potentially a long-lasting impact based on the kind of effects that the outcome could have. But for now, at least as far as the Nifty is concerned, we're off 22,500, which we're about 600 odd points away from life highs as well. And that said, we're starting to see a little bit more activity as far as the June futures are concerned. On an absolute basis, 48%, but this is also on expected lines. The first day of the new series. Let's move on and talk about the Bank Nifty. Again, early days here, but we did see the Bank Nifty show a little bit of a divergence yesterday. So while the Nifty was down, the Bank Nifty was advancing on the back of a handful of names from the private sector space. But now we talk about the options market. We move into that all-important, crucial 6th of June expiry for the Nifty weekly options. What we've seen is most amount of activity between 22,500 and 23,000. Between 22,500, 600, and 700, there's an ample amount of calls as well as puts written here, as you can see here on your screen. And remember that this has been a big shift, because just about last week when we did see, in fact, the Nifty, test 23,000, that's where we were also seeing a lot of activation around the 23,500 calls, a lot of those calls being written. And mind you, that this will also change through the course of the next 2 to 2.5 odd sessions. And I say 2.5 odd sessions because we'll have the outcome of the general election on Tuesday, a little later on in the day, perhaps the first couple of hours. We'll start getting trends of an idea, an inclination, an inkling of kind of what we can expect from the outcome. Now, coming down to your overall open interest distribution, remember until last week, or rather a few days ago, we were considering the 23,000 as a center point with 23,500 on the higher end and 22,500 on the lower end. Now it does seem like we've seen the limelight and focus shift back to 22,500. That's as the center point at the moment. Again, a lot can change between now over the course of the next 2 days, and that's very much evident in the kind of implied volatilities that you're seeing, the option premiums and the expansion in option premiums that you're seeing as well. Let's talk about stocks then. And it was a weak day of trade. So we have seen shorts for Piramal Enterprises, GNFC, Biocon, Titan, Tata Steel as well, among stocks which saw unwinding, longs unwinding for something like an ABFRL. We should have that on for you as well. So we have ABFRL, Max Financial, Gujarat Gas, along with Dabur India. All in all, a weak day of trade, maybe expected. And the question really is that what do you do based on the current market levels? Where do you place your bets? Let's get in an expert opinion. We have Milan Vaishnav of Gemstone Equity Research who's joining us on the show. Milan, good morning. Thank you so much for joining in. How are you dealing with the Nifty at the moment? And what's the way forward? What sort of option structure are you deploying here?
Very good morning to you, Agam, and all the viewers. This would be basically a common sense-led approach as we navigate the coming week, because election results might come trickling in on Tuesday, but from Monday onwards, we are likely to see some increased volatility because of the exit polls and all that stuff. Now, taking a look at the Nifty, there are two things I am seeing. That one is that if we take a look at the options data by zooming out a bit and including some 15 strike price from the current levels on either side, I see that there is a huge buildup of the call OI at around 23,500 and 22,000 levels of the put OI on the low side. So what I feel that market participants are preparing for some 700 points of move on the either side of the Nifty as we go ahead into the next coming 2 to 3 days in the markets. So what I feel is that by and large, there is some a scope of some short covering happening because we are 600 point off the lows, but sorry, off the highs. But taking a little broader look, I feel that market participants are factoring in some spike. If we try and quantify the spike that market participants are expecting, I feel that 700 to 500 to 700 points on the upper side, 500 to 700 points on the lower side is something what market participants expect from the Nifty, and that is how the options data is showing, at least as of now.
So based on that, Milan, what kind of structure are you deploying on the Nifty right now?
See, this time I won't be going for with any strangles because strangles can cause you a lot more damage when we know that the moves are going to be volatile. So this time I'll be betting on a potential technical pullback. I expect Nifty to test 23,000 at least once, even if it has to show some retracement. So I'll be going with a bull call spread. I'll be buying 6th June expiry 22,500 call and would be selling 23,000 call. Net premium that I would be paying would be around 220 rupees. Maximum profit potential here is 7,000 and maximum loss is 5,500 rupees. Now here we will need to book profits if Nifty sees 23,000 levels. And to even minimize the maximum loss figure, we can apply a protective stop if Nifty slips below 22,250 level.
Okay, so bull call spread as far as the Nifty is concerned. Well, Milan, I believe you also have a stock on your radar, that's Hindustan Unilever.
Yes, I'm going in with a little defensive stance this time, and we have FMCG index also showing a sharp improvement in its relative momentum against the broader markets. So I will be again going in with a call spread for Hindustan Lever. I will be buying 2360 call, June call of course, and selling 2440 call. Net premium I would pay would be around 2650. Maximum profit potential is 16,000 and maximum loss is around 7,900. Again, we will need to book profits if Hindustan Unilever moves past 2440, and as a protective stop to keep the maximum loss also with still lower, one can keep a stop loss at around 2,300 rupees on the stock.
Have it. So that's the view as far as Hindustan Unilever is concerned. Well, on that note, Milan, taking a moment to thank you for joining us and taking us through your views on the markets and giving us a handful of strategies to work with